On April 17, 2026, Iran's announcement that the Strait of Hormuz would reopen coincided with a sharp drop in oil prices and a lift in U.S. equities. That was the market's headline all day. The move mattered because Hormuz is still the key oil choke point investors have been watching since the war began.
The price action backed that up immediately. The Associated Press said the S&P 500 rose 84.78 points to 7,126.06, a fresh all-time high. The Dow added 868.71 points to 49,447.43, and the Nasdaq gained 365.78 points to 24,468.48. So this was not just a quiet relief bounce, it was another strong session at the top end of the range.
Oil was the transmission channel. AP reported that U.S. crude fell 9.4% to settle at $82.59 a barrel, while Brent dropped 9.1% to 90.38. That is why equities reacted so quickly. If the market thinks energy pressure is easing, it also starts thinking inflation pressure and growth pressure may ease with it.
But the market is not pricing a perfect outcome. AP also noted that even after that drop, Brent was still above the roughly $70 level seen before the war. So the right read is not that risk disappeared. The right read is that one very painful part of the risk premium came out of the tape on Friday. That helps explain why the rally still feels broad instead of fragile. For the week, AP said the S&P 500 gained 4.5%, the Nasdaq gained 6.8%, and the Russell 2000 gained 5.6%. This was the third straight week of big gains. In other words, April 17th did not start a move from scratch. It extended a tape that was already leaning risk on. There was also a market structure layer behind the move. Reuters, citing a Goldman Sachs note, said systematic funds added $86 billion of stock exposure over the prior 5 trading sessions. That does not prove flows were the only reason stocks rose, but it does show that mechanical buyers were adding fuel at the same time the macro headline turned friendlier. That is the important distinction for this episode. The rally had both a news catalyst and a positioning tailwind. The Hormuz headline helped lower the immediate oil shock. The systematic flow story helps explain why the move could travel so fast once the pressure released. That combination fits the way this market has been behaving near record highs.
The next macro checkpoint is already on the calendar. The Senate Banking Committee says Kevin Warsh's nomination hearing is scheduled for Tuesday, April 21st, 2026 at 10 a.m. That hearing matters because it is the next moment when markets may have to think less about relief and more about what future Fed leadership could mean for policy. So even with stocks at highs, the market is not done with macro. Friday's move said investors were happy to price less oil stress right away. It did not settle the next policy debate. If the tape stays strong into next week, Warsh's hearing becomes one of the first places where traders will look for a reason to either extend the move or question it.
Next week also brings a concentrated earnings calendar. Interactive Brokers said it plans to release first quarter results on Tuesday, April 21 at about 4 p.m. Eastern. Tesla said it will report after the close on Wednesday, April 22nd, with its Q1 webcast at 5:30 p.m. Eastern. GE Vernova lists its first quarter earnings webcast for Wednesday, April 22nd at 7:30 a.m. Eastern.
That gives the market 3 different readouts in less than 2 days. Interactive Brokers speaks to trading activity and retail participation. Tesla is still one of the cleanest sentiment barometers for growth and risk appetite. GE Vernova matters because investors keep treating power and grid build-out as part of the broader AI and infrastructure story. So next week is not just about one report. It is about whether several parts of the tape still confirm the bullish mood.
There is one more reason to stay disciplined here. AP's live coverage said tanker traffic through Hormuz was still being funneled through approved corridors on Friday evening, even after the reopening announcement, and the U.S. blockade on Iranian ships and ports remained in force. That means Friday's relief was real, but the situation was still conditional. The market got a better headline, not a permanent all clear.
So the watch list is straightforward. First, can oil stay off the panic highs now that Hormuz is open again? Second, can the S&P 500 hold a record close above 7,100? Third, does next week's Warsh hearing change the macro tone? And fourth, do Interactive Brokers, Tesla, and GE Vernova keep the earnings calendar aligned with the risk on tape? Full source links are in the description.
This report is for informational purposes only and is not financial advice.